Welcome to AGORACOM Talks, your weekly go-to source for the best small-cap headlines for over 65 million investors since 2007.
Wow.
Today, we're diving deep into some potentially market-moving news for investors on both the Canadian Securities Exchange and the NASDAQ. We've sifted through the latest press releases, and our mission is to bring you the crucial financial and operational highlights, the kind of results that could signal real opportunity and warrant a closer look.
Yeah, I mean, we're focusing on like what truly stands out.
Right.
You know, those data points that suggest, you know, a shift in momentum.
Exactly.
Or the validation of a company's strategy. Think of this as like your rapid briefing on what's making waves.
I like it. Let's get straight to it. The development in the drone sector is showing some serious velocity. Draganfly, trading on the NASDAQ, under the symbol DPRO, just announced their Q4 2024 results, and the headline is grabbing attention.
Let's hear it.
Draganfly's strategic pivot toward defense and public safety begins to show results. Q4 growth signals future momentum for drone innovator, a mid-sector shift. Now, behind the sometimes optimistic language of press releases, there's a number that really jumps out here.
What is it?
76%.
Oh, wow.
Yeah.
That's huge.
Draganfly reported a substantial 76% year-over-year increase in revenue for the fourth quarter of 2024.
Okay.
In the small cap tech space,
Right.
that kind of growth in a single quarter can be a significant indicator that a strategic shift is gaining traction.
Sure.
This pivot into defense and public safety appears to be doing just that.
Seems to be working.
Right.
Yeah.
Historically, the consumer drone market has been competitive.
Yeah, very much so.
But this move targets potentially more stable and higher value contracts.
Interesting.
Right, while their full year 2024 revenue saw a more modest increase of 0.1% to $6.56 million. That Q4 surge strongly suggests that their focus on military and emergency applications is starting to translate into significant sales. The investor note also mentions that their product sales increased by $81,383 in 2024. Now, it's worth noting there was a one-time inventory write-down that impacted gross profit, but that quarterly revenue growth is a powerful signal.
An inventory write-down is something to acknowledge, but a 76% revenue jump suggests strong demand for their products in these new target markets. Investors should be asking if this Q4 momentum is sustainable and what their backlog looks like in the defense and public safety sectors. Moving into 2025, continued growth in these areas would be a strong validation of their strategic pivot.
Switching gears now to the Canadian Securities Exchange, we have news from Renforth Resources, trading under the symbol RFR. Their headline highlights promising development at their Quebec nickel project. Renforth Resources unveils promising metallurgical results. At Quebec nickel project, new testing confirms potential for copper, nickel, and zinc recovery, reinforcing viability of flagship Victoria project for investors in the battery metal space. Metallurgical results are key.
They are because metallurgical testing tells us whether the valuable metals in a deposit can actually be extracted economically. What's compelling here is that Renforth's initial testing at their Victoria project in Quebec indicates the potential recovery of copper, nickel, and zinc using conventional flotation processes. Specifically, they found up to 100% of copper in commercially viable minerals, nickel predominantly in favorable minerals, and all zinc over 0.1% in a standard commercial mineral. For an early stage project, demonstrating the recoverability of multiple battery metals is a significant step towards proving economic viability.
So what is flotation exactly?
Flotation is like a standard industrial process where valuable minerals are separated from waste rock by making them water repellent.
Interesting. That potential to recover multiple metals. Copper, nickel, and zinc from their 100% owned Malartic Metals package. Using well-established techniques is definitely something investors will know.
They should.
Especially with the increasing demand for these materials. The investor note does caution that these are early-stage results and further optimization is needed.
Absolutely, further optimization is crucial to determine the ultimate recovery rates and project economics. However, these initial results provide a strong indication that the Victoria project holds metallurgical promise. For more than just nickel, a polymetallic deposit like this can offer advantages in terms of potential revenue streams and buffering against price fluctuations. In individual metals,
Yeah, sure.
investors will want to see how Renforth progresses with this testing and what the optimized recovery rates look like.
Staying in Quebec, St. George's Eco Mining, trading on the CSE under the symbol SX,
Right.
has announced a discovery that puts them on the map
Okay.
in the critical minerals sector. The headline reads, St. George's Eco Mining uncovers key strategic metals at Notre-Dame project, discovery of niobium, and rare earths puts emerging Canadian explorer on the map. Niobium and rare earths are highly sought after.
They are.
For various high-tech applications.
Absolutely, that's right. The compelling result here is the confirmation of niobium and other high-value critical minerals. At their Notre-Dame critical minerals project, surface sampling and early drilling have identified a carbonatite dike, a type of rock often associated with rare earth elements, containing significant concentrations. We're talking niobium up to 2,360 parts per million, with some samples exceeding 3,376 ppm. They also found tantalum up to 60 ppm, gallium up to 48 ppm, and total rare earth elements as high as 4,000 ppm. What's particularly significant is that the CEO Herb Dewar noted that all early drill holes intersected niobium mineralization over meaningful widths, and that surface mineralization could be traced to depths of 16 to 36 meters. That near-surface occurrence, combined with the presence of multiple strategic metals, like niobium and rare earths, in a mining-friendly jurisdiction like Quebec, presents a potentially lower cost exploration and development scenario. The investor note highlights this potential to position St. George's within the critical minerals supply chain, which is becoming increasingly important globally.
Right. Niobium, for example, is crucial for strengthening steel alloys used in infrastructure and aerospace, while rare earths are vital for electronics and magnets in electric vehicles.
Exactly. The fact that the mineralization appears to be near surface is a significant potential advantage, as it could reduce future mining costs. However, investors will want to see further drilling results to determine the overall size and grade of the deposit, as well as metallurgical testing to understand how easily and economically these critical metals can be extracted.
Moving on, still on the CSE, ES Gold Corp, trading under the symbol ESAU, has an ambitious headline that's drawing attention.
Okay, what does it say?
ES Gold Corp targets a Broken Hill level discovery in Quebec. A modern exploration strategy reawakens Montauban. New geological data suggests ES Gold's Notre-Dame project may mirror one of the richest polymetallic deposits in history, comparing your project to Australia's legendary
Pretty ambitious.
Broken Hill deposit, known for its massive silver, lead, zinc, and gold mineralization. It's a bold move.
It is the compelling result here is the geological evidence. ES Gold has identified. That suggests these parallels. They've discovered rhodonite, a manganese silicate often associated with Broken Hill type deposits. They've classified the Montalban structure as a volcanogenic massive sulfide, or VMS deposit, which is the same classification as Broken Hill. VMS deposits are known for hosting significant concentrations of base and precious metals. ES Gold is also highlighting structural similarities, like intense folding and faulting, and the fact that the host rocks are of the Proterozoic age, similar to Broken Hill.
Interesting.
Furthermore, they are employing advanced techniques, like ambient noise tomography for deep underground imaging. Their senior geologist stated that the deposit shares many geological hallmarks with one of the most famous VMS deposits globally.
By applying these modern deep penetration exploration techniques to a historically explored but perhaps underexplored site, ES Gold is aiming for a potentially major discovery of silver, lead, zinc, and gold. The investor note emphasizes that the upcoming results of their ANT survey, expected in the next 4-6 weeks, will be absolutely critical in guiding their next drilling phase and determining if these geological similarities translate into a significant economic discovery.
Precisely. While the geological similarities are intriguing, it's important for investors to remember that early geological interpretations need to be validated by actual drilling results. The ANT survey will provide crucial subsurface data to help define drill targets. The potential for a Broken Hill scale discovery is certainly exciting, but it remains a high-risk, high-reward scenario at this stage.
Let's shift focus now to the TSX Venture Exchange and HPQ Silicon, trading under the symbol HPQ. Their headline highlights a significant milestone in green technology. HPQ Silicon hits key milestone. In push for green tech, disruption of fumed silica industry. Montreal-based innovator HPQ Silicon takes a major step forward in commercializing cleaner, more sustainable fumed silica production, validating its next-gen pilot reactor and moving closer to disrupting a fossil fuel-reliant industry. Fumed silica is a key ingredient.
It is.
In many industrial and consumer products.
That's right. Fumed silica is used in everything, from adhesives to pharmaceuticals. Traditionally, its production is energy intensive and generates carbon emissions. The compelling result here is HPQ Silicon's successful pilot scale testing of their proprietary fumed silica reactor developed in collaboration with Pyrogenesis. They were able to replicate the material characteristics achieved in earlier lab tests, which validates the scalability of their cleaner plasma-based production process. The CEO of HPQ, Bernard Torian, emphasized that they've shown they can achieve the characteristics of premium fumed silica through their greener process. The CEO of Pyrogenesis, Peter Pascali, added that by eliminating carbon emissions without compromising quality, they are setting a new industry standard for sustainable fumed silica production.
This successful pilot plant production, as highlighted in the investor note, brings HPQ significantly closer to commercializing a more sustainable and potentially disruptive technology in a high-demand industry. Validating their low-carbon alternative to traditional energy-intensive methods is a major step forward.
Absolutely. If HPQ can successfully scale up production and compete with traditional fumed silica producers on both cost and quality, their greener technology could be a significant advantage. Especially as industries face increasing pressure to reduce their carbon footprint, investors will be watching closely for updates on their commercialization plans and potential partnerships.
Finally, we look at AI6 Solutions, trading on the TSX Venture under the symbol AISX. Their headline addresses a growing global concern.
Interesting.
AI6 Solutions unveils game-changing wildfire risk tool with launch of Wildfire 3.0 API. As climate change accelerates the frequency and intensity of wildfires across North America and beyond, AI6 Solutions, Inc., a Canadian climate risk intelligence company, is stepping forward with a tool that could reshape how businesses and governments prepare for these devastating natural disasters. With wildfire risk increasing, this type of technology is becoming crucial.
It certainly is. The compelling result is the launch of their new Wildfire 3.0 API, which provides direct access to advanced wildfire risk data. This API integrates climate change projections, historical fire records, and predictive modeling to offer burn probability and fire intensity forecasts all the way out to the year 2100 under different climate scenarios. It also provides detailed historical fire data and risk scoring. The head of product explained that this allows organizations to access granular wildfire risk information for more informed risk management. And the CEO emphasized the expanded access to this critical data.
As the investor note points out, this new tool provides valuable, granular wildfire risk intelligence to governments, insurers, and other organizations that need to understand and mitigate wildfire risk. This positions AI6 Solutions in a growing market for climate risk management solutions. As wildfires become more frequent and intense, the ability to project risk decades into the future, taking climate change into account, offers a significant advantage
for long-term planning.
Precisely, the increasing frequency
and severity of wildfires are driving demand for more sophisticated risk assessment tools. The Wildfire 3.0 API's ability to provide long-term projections under various climate scenarios offers significant value for stakeholders across multiple sectors.
These are more than just headlines. They represent potential inflection points for these companies.
I think
Draganfly with their impressive Q4 growth in defense, Renforth with encouraging multi-metal recovery potential, St. George's with a promising critical minerals discovery, ES Gold with a gold comparison, and the application of advanced exploration. HPQ hitting a key milestone in green technology, and AI6 providing crucial tools for managing wildfire risk. We encourage you to dive deeper into their press releases and conduct your own thorough research.
Absolutely. What we've seen today are companies demonstrating tangible progress, whether it's significant revenue growth, positive initial results in resource extraction, validation of innovative technologies, or the launch of solutions addressing critical global challenges. These are the kinds of developments that can lead to substantial opportunities for investors who do their homework.
So for you, the listener, we hope this rapid rundown has highlighted some potentially significant stories. In the small cap markets, these aren't just vague promises. They involve real financial results, tangible resource findings, and the application of innovative technologies. It's within these details that investment opportunities can emerge. This has been your AGORACOM Talks update. Stay informed, and remember to always conduct your own due diligence before making any investment decisions.
And as you delve deeper into these stories, consider the broader trends at play, the increasing demand for critical and battery metals, the growing importance of green technologies, and the urgent need for climate risk solutions are all creating new landscapes of opportunity in the small cap space. Keep these macro trends in mind as you evaluate the individual potential of these companies.